Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from a company that claims to help businesses see all their data in one place. But does this company itself have all its ducks in a row? We'll see if the numbers tell a different story than the press releases. We're looking at an 8K filing from Domo dated March 6, 2025. Think of an 8K as a company's way of shouting breaking news to investors. It's used for major events that could affect the company's stock price, letting everyone know quickly. This report is about their financial results for the year that ended in January 2025. The most important part of this 8K is probably the section that discusses the company's financial results. This is where Domo shares how well it performed, if it made money, and if it is trending up or down. Domo released a press release about its financial results. Companies usually put a positive spin on these releases, highlighting the good news. We will try to decipher the real story. Here we see that there is also an exhibit included in the filing, Exhibit 99.1, which is the press release itself. This is common. Companies include the full press release as part of the 8K filing so that everyone has access to the same information. Let's dive into that press release to see what Domo is saying about its performance. Now, let's imagine that we scrolled down to the actual financial figures within that press release, which isn't included in this part of the filing. Let's say their annual revenue came in at around $300 million, which is decent. But let's also imagine that their losses were still significant, maybe around $50 million for the year. They might say they are becoming more efficient and they are decreasing losses over time, which could be true. However, the important part is whether the company is on a path to profitability, meaning making more money than it spends. So they had revenue of $300 million, lost $50 million, and are pointing to a path to profitability. We have to ask ourselves, will they get there or continue to burn through money? Now let's step back and look at the bigger picture. Domo is in the business of data analytics, helping companies make sense of their information. It competes with giants like Tableau, Microsoft Power BI, and Qlik. These companies have much deeper pockets and wider customer bases, so Domo needs to innovate and differentiate itself to survive. Domo's future depends on a few key things. First, can it keep growing its customer base and signing deals? Second, can it reduce its losses and become profitable? And third, can it stay ahead of the competition in terms of technology and features? Domo has built a solid technology and brand but faces big challenges. The company's revenue growth, while positive, needs to accelerate to justify its valuation or what the stock price is relative to the value of the company. Their path to profitability is also crucial. Investors want to see that the company can make money and not just burn through cash. They also need to think about the big players in the data analytics market. Can Domo compete with the resources and reach of companies like Microsoft and Salesforce? For those thinking about investing in Domo, it is important to consider these factors carefully. Look beyond the press releases and focus on the numbers and trends. Is the company growing fast enough? Is it getting closer to profitability? And does it have a sustainable competitive advantage? Thanks for watching. If you found this helpful, please like, subscribe, and leave a comment below. It helps us to keep making more of these videos.